turning our attention a little bit to that again, actually. So let's go back to the Fed's decision today, and then maybe we can get into that the hex thing here in a moment. But so we had the 50-point rate hike today. I keep saying hike. The 50-point. I'm so used to it. The 50-point cut today. Somewhat surprising, of course. The argument. Apparently, what was going on is, so we've talked about this before. So we have the session today. They're going to have one the day or two after the election is the next FOMC, and then one in December as well. So apparently the conversations that started to come up was that there's going to be a total of 75 points that they want to cut over the next two meetings, and whether to do the one that would equate to 50 now or in November. And they decided to just go ahead and rip the Band-Aid off and do 50 now. So the interesting thing, maybe more so than the decision to do 50, was some of Powell's speech, where he emphatically said many, many times, and even when he was questioned as well, that how great of shape the economy is in. We have inflation down towards 2%, which, I mean, I can't imagine anybody actually believes. All these things about how great the economy is doing right now. He was pressed also about, are you just making this decision? Is this a political decision? It's just to save face politically, get Kamala Harris elected and things like that. And of course, he wouldn't really entertain that and danced around that question and didn't answer it dead on. But what do you make of this? I mean, because you just a couple of weeks ago were thinking that they wouldn't make any move at all. Then the majority of the market overwhelmingly was like, oh yeah, we're going to see a 25-point cut. And then only within the last week did we see this increase of the chances of 50 points. And then here we are today, and it's a 50-point rate cut. So what do you make of this in the short, mid, and long term, specifically for this market? But then, I mean, also, and how this could just affect the U.S. economy in general, because this is going to spur recession fears and stuff like that. I think we've already been in one, and they just changed the definition, a year ago or something like that. But there are negative effects of doing this at this moment in time. But then again, it's kind of a glass half full type of thing. Like, there are some things within the economy that it's going to hurt, but these hasty decisions by the Fed in this country with monetary policy are exactly why we're in crypto to begin with. And I think that's the bigger picture. So what do you make of this decision and how it could affect things kind of all around here?
So yeah, I've been on the 25-point side ever since the sentiment kind of went that way. So I was surprised to see the 50 points. Now, I think, as I said earlier, that the 25 was kind of baked in. I think that's why you saw the reaction that you did when it happened. Short term, I think it's going to it's a bullish, it's going to provide bullish sentiment. So you're going to have green days today, tomorrow, maybe the next week or so, until it kind of evens out. Because, like I said, the 25 points was kind of baked in already. So this other 25 kind of has to even itself out. Short term, I think, you're going to see some pumps, some bullish activity. And then depending on what happens at the next meeting, because there are rumors now of another 50 points by the end of the year. So we could get two 25-point hikes or now I'm doing it too. Reductions. I think we get two more 25s throughout the end of the year. And I think it's dangerous to change it that quickly. For the longest time, they stayed stagnant, waiting for the numbers. Let's wait for the numbers. And now all of a sudden they're going after it. And it just makes you kind of wonder why, right? Is it political? Is this a stunt to beef things up a little bit, to allow more money to come in, strengthen things short term? But we all know what happens after, on average 35, 40 days, you start to see the downturn of this. Historically, everything drops within, let's say an average of 45 days after a rate cut. So, that's pretty much right in line with the election. So someone had said earlier that Powell was appointed by the Trump administration. Is that true? Do you remember that?
I don't think so. No, I didn't think he was. I mean, he's a Democrat, I'm pretty certain. So I don't believe so. I'll look it up while you talk. But
Yeah. So you know, they always claim, well, no, there's no political agenda here whatsoever. You know, we're in favor of trying to just strengthen the markets overall in general, political affiliation aside. So,
yeah, you're
um,
right. No, it was under the Trump administration, February 2018, actually.
yeah, okay,
Interestingly enough.
I
Yeah.
thought so. So you know, there's that side of it too, right? These guys, so you have to remember, um, the government wants us to be workers, right? They don't want the middle class getting to be a higher middle class. And during COVID, that really started to happen. People ended
Mhm.
up having a nice savings. People ended up having more money because you know everything was closed down. Couldn't go out. You couldn't do anything. So therefore, you had extra spending, extra savings, and I think you know that took a hit. That's kind of what started all of this. The government wants us to be broke. You know, there's no other really way to spin it, and it, you got to remember, even with these rates coming down, the prices, you know, they keep saying the inflation has slowed down. Inflation has slowed down. We have to remember, though, that the prices aren't coming down. They
Mhm.
just may not go up, right? So we are at where we're at still. The groceries are still expensive. Gas is still expensive. That can be fixed. The gas prices anyway, with some changes to where we're getting it from, right? If we start drilling domestically, then definitely we can bring those prices down quickly, which in turn should bring other things down. The cost of transportation definitely affects the pricing of a lot of our, you know, basic needs and services, things like that. So, um, yeah, long term though, I do see definitely a pullback with everything. So I think by middle of next year, you're going to start to see it. Unfortunately, that may bring people into crypto, right? Seeing everything else go down, I don't know if they're going to be like, well, this isn't working. We got to go over here. I hope it doesn't screw up the 4 year cycle. And I don't know that this has ever coincided with that. I don't think it has. I don't think we've had to really lower rates during a crypto cycle. So it's going to be interesting to see how it all plays out. It really is.